Welcome to the Real Estate Investors Weekender Podcast. This podcast is brought to you by the award-winning editorial staff at NREIOnline.com. Let's jump right into this week's top news, features, and blog posts.
Welcome to the NREI Weekender with your host, David Bodamer. Let's dive into this week's top news. David, I know you've got a lot to highlight today. What are we going to be covering today?
So we're going to try to touch on a few of our big stories from the week. We're going to look at some of the things that we wrote about this week include some of the questions that private equity real estate fund managers are facing in the current climate, looking at the state of industrial investment sales. Also, we had an interesting look at what one mall owner has been doing to help drive business to its outlet centers. And then lastly, may want to talk about what some younger apartment tenants, how they're struggling in this environment of raising rents. So we're going to start with the private equity story.
All right. Basically,
what we've found is, the private equity fund managers have raised an incredible amount of money. They're sitting on a huge amount of money. They're the ones that are targeting real estate are constantly trying to invest. That's been a story for a better part of a decade at this point. The issue that now they're facing, given the climate, is that their yields are going down, which is causing them to actually lower their target yields for their funds. That's kind of the challenge they're facing. Is like, they cannot deliver the yields that they were promising to their investors. That's a problem. So now they're looking at, whether they need to adjust that or how they can account for that.
Yeah, that'll make somebody mad. So what are your thoughts? I mean, how are they going to do that?
So one potential way that they're looking is, given how frothy things are with core property types, which they have been for a while, looking at other markets, secondary property types. That's one way they could try to drive the yields. But I think also, and they're looking at markets like Austin, Denver, Salt Lake City, where in the past a lot of these funds would focus more on like the gateway primary markets. But I think what's another thing that's difficult for them is even in all of these markets, they cannot make the same assumptions about how rents are going to grow or how the property values are going to grow that they were making in recent years, just because of where we are at in the cycle.
Okay, so David, earlier you said that if they're not able to, bring the investments back to their investors, I got to ask that question: where is the satisfaction level of investors at this point?
Well, one of the companies we talked to, that a lot of this is based on, is Preqin. They're a data company that does a lot of research and then also looks at the sentiment within the sector. One thing that they found is that 2/3 of fund managers are the new funds they're bringing to market. They're lowering those target returns as a result of the concerns about the valuations and their effect on future performance. I think to this point, by and large, investors are satisfied, despite some of these potential headwinds, because relative to other investments, real estate is still holding up, even though it's becoming more challenging to get to the yields that maybe they were getting a few years ago.
Yeah, so it's not all bad news. I mean, it's okay at this point.
We're just at a very mature part of this cycle, and during the expansion phase of the cycle, it may have been easier to, in a lot of areas, a lot of different kinds of investors and a lot of different kinds of properties to deliver yield in a lot of ways. There was just a lot of room for growth. But now, we've been going for such a long time, the opportunities to find growth are shrinking. But we're not, also not in a situation where the cycle is in a downturn yet. So there's, I think this is kind of the time of the cycle where the most skilled fund managers, the most skilled investors are the ones that will deliver the best returns.
Yeah, absolutely. That sounds about right. All right. What's our next story? What do we cover next?
So then another thing we looked at this week is just the state of the industrial real estate. That's been in the past, I think as most of the listeners would know, is that industrial has been very hot. It's been more or less trading back and forth with multifamily and as the hottest subsector within commercial real estate. But some of the most recent data is showing, though, that industrial sales transactions have fallen off from a year ago. Just because it's just a basic supply demand imbalance. Everybody wants to buy, as one of the people we talked to put it, everybody wants to buy, but nobody wants to sell. So it dovetails with what we were just talking about in the previous story, which is that, given the state of the cycle and given maybe concerns about, how much more room is there for asset values to go up, how much more room is there for rents to go up, income to go up. I think, investors are just becoming more selective about what they're going to buy. And then also, if you are sitting on, a pretty strong asset, it's not a time where you're necessarily looking to sell that.
Yeah. If it's doing well, why would I sell? Right. I mean, that's the bottom line.
Right. I mean, I think, if you had purchased the asset a few years ago and you'd experienced a good run up in rents, if you'd seen the value go up, it may be a time where you wanted to cash in on that equity, realize the inherent asset valuation increase that may have gone on, but only if you think you could spin that into another similar opportunity. And I think that may be the one of the challenges is that at one point in the cycle, you could buy an asset, it would be performing well, you could continue to try to ride it out, or you could try to flip it and maybe find another opportunity where you can, ride things up again. But now there are fewer of those opportunities. And so maybe it is better just to hold the performing asset that you do have.
Yeah. Is the market seeing a real difference between foreign versus domestic investors? I mean,
industrial has become highly sought after by both. It's obviously always popular for domestic buyers, but international investors are very interested in the U.S. industrial market. According to a survey by the Association of Foreign Investors in Real Estate, they found that 71% of foreign investors are actually looking for opportunities in U.S. industrial markets. And there's always been some interest in industrial. I think it's just gone up, just given what we know about how industrial sits relative to some of the other commercial property types.
Yeah, I mean that's a pretty large percentage to be talking about, and that was a little bit surprising to me, in fact. So, do you think that plays into domestic investors' minds when they read a study like that and they say, "Oh, geez, if there's that much push for it from a foreign investor, maybe I need to be looking more at the industrial market. Maybe they know something I don't, or maybe I need to do some more research." I mean, how do you think that affects them on a psychological level, if we can get that deep?
I think it affects them in just it's another competitor to deal with.
Yeah, true. Yeah,
if they're looking at, it has been a popular asset for U.S. investors, and for the skilled operators, but now they have to worry about just another class of buyers who are targeting the same assets that they are.
Yeah, absolutely. All right. What's our next story? What's our next highlight?
So this next piece we did was I found very interesting twists on what's happening in the retail world, which is that Simon Property Group, who is the largest mall owner in the country. Most people know that they also have quite a large portfolio of outlet centers and some other types of properties. But what they've done now is to help drive the business in their outlet centers. They're launching a new online portal meant to both help drive up sales and traffic at online and in its stores among its traditional outlet center tenants. It's beta testing this with what it calls its VIP Shopper Club, which is a group of about 4 million members nationwide already belong to this. And so they're going to get first access to this. And then I think based on the beta test, they're going to roll this out even further to make it available to people that its portfolio of 69 premium outlets that exist across the country. So there are a number of brands that are going to be participating in this. That includes names like Aeropostale, Saks Fifth Avenue, Cole Haan, Nautica, Reebok, Wilson's Leather, and a bunch of others. So what's going to happen with this is that the brands and the retailers will manage their own product pages and offerings through this portal. And then consumers will be able to kind of go to the site, shop, basically do like a virtual shop of like, the kind of tenants that are normally in a premium outlet center, and buy them directly through this one site, so that they'll be able to kind of shop all these different stores, do a virtual trip to an outlet center. And then the plan is for Simon to take a cut of the commission of any sales that happen to take place through this portal.
Got it. So just looking at this in general, I know Amazon has everything. I mean, pretty much has everything. Do you think this is going to rival Amazon in any way, shape, or form? Do you think, is there some sort of rules that they have that these the outlet centers are only going to be offering these type of prices to on this specific site instead of it being where anybody can get anything off of Amazon?
I think it's an interesting question, and it also speaks to the timing of Simon doing this. I think what they launched it because they do see a void for an online marketplace dedicated to this kind of product. So I guess, in their estimation, while you can get so much at Amazon, maybe the kind of, the markdown late season, the kind of stuff that maybe a little bit harder to track down online because it's not being marketed as aggressively. Maybe it'll just provide an easier place for shoppers to find that. But then we reached out to some consultants about, within the retail industry to see, okay, what do you think of this idea? Since this is sort of it's an interesting step for a property owner to insert themselves this directly into the sales process. Normally, they're just going to manage the property, provide the services to, provide the space and the services to tenants, but let the tenants largely worry about their sales. They maybe have some loyalty programs or some perks at the center, but I think this is an interesting way for a property owner to be this heavily involved in the operational side of the retail business. And I think the response to that, I think people have a bit of a mixed response to it. Some see, Simon does this and it works. This is clearly going to set a trend that other property owners will follow. But then another consultant we spoke to was pretty harsh about it. He said that he actually called it a waste of time. He said it's irrelevant and late. That at this point we are more or less what he was trying to say is that we're so deep into the growth and development of online sales that trying to carve out a niche at this point is just too late. So I think at the end of the day, what it means is that we're just going to see how it shakes out.
Yeah, I agree. I think that I do a lot of shopping on Amazon, but the local outlet center that we have near our house, I love it because the kitchen gadget store, I like to go in there and play with the things. Right? I want to look at these new gadgets that we don't have, and my wife is a tremendous cook, so it's great to be able to get some of those things. But we're not going to buy a lot of those things online because half the time I don't know what they do. So I need to figure that out before we buy it. Or Bose is another store that is in our local outlet mall. I want to go listen to those things. I want to listen to the different types of headphones. And if I'm going to shop online for Bose and I'm satisfied with all the research I've done, I'm usually going to choose an Amazon. So it'll be interesting to see if they have some sort of something in place that would keep these prices even lower than what's offered on other sites. Otherwise, I would almost agree with that second consultant that says you're a bit late to the party.
Yeah. I think it's it's definitely going to be. I'm not sure exactly how I feel about how it's going to play out either. I think what I could see happening though is like if you do have. I think it may depend on how, from like a consumer perspective, if you have you just named off the top of your head, the couple of the stores at your local premium, at your local outlet center that and you like, if that kind of familiarity, will play in at all. It's like, well, like rather than just going into the, if I'm on a similar mindset of like, I want to go to I want to go there and browse and stuff, but if I could go to their website and look at the same stuff and maybe facilitate the transaction that way. I don't think maybe that's part of the way they think they can leverage this is just like they know that they have a market, they know they have people that come to the center regularly. So this is just a way of kind of extending that relationship with them. But yeah, it's going to be tough because, as you pointed out, on pricing, it's pretty tough to beat. On a pure pricing level, it's pretty tough to beat what the pure play online retailers can do. But I think it also, speaks to the last aspect of this that's sort of interesting, or the last factor is that, we know that Amazon themselves is now actually creating more of a space in the bricks and mortar world. So it's kind of going the other way too. So where part of the way that they see of growing their business is by opening, experimenting with various brick and mortar concepts. So, maybe this is like this continued evolution, so maybe it can work both ways.
Yeah, absolutely. All right. I know we got a couple more stories to get to, hopefully. What is the next one we're covering?
The next piece was in a piece that we were looking at based on some research in the multifamily sector, which was an attempt to see how younger renters are, how they're coping with rents and housing in the current market, just given that in a lot of markets, rent has gotten extremely expensive. So this was a look specifically, and when we're talking about younger renters, we're talking about people that are like age 35 or younger, people, sort of just out of college up until their mid 30s. And, various studies have found that it's kind of a tough market for both, it's according to like one metric, even with incomes rising recently, adults under the age of 35 are not forming households at rates as high as previous generations. So instead, we're still seeing a lot of young people that either are living at home or are in roommate situations and renting as roommates. According to data provider RealPage, who we spoke to, almost a third of all renter households are made up of people in their 20s to 30s who live alone. But then the next largest group of renters is comprised of young people who have to double up with roommates. So,
Wow.
like that it's, it's kind of this interesting, dichotomy, where I think, in previous generations, that level of people living with roommates to that age range was much lower. So, for example, there are some markets in the West Coast, like San Jose, San Diego, San Francisco, Portland, LA, where these roommate situations account for like up to 40% of the apartments in the market. So that's just, I don't know. I don't think it was like, I know that for me personally, when I moved to New York in my early 20s, I had roommates, but like that was for like a year.
Yeah. It wasn't a long-term thing.
So it wasn't like but yeah, it's just different now where I think it is partly has to do with just the rent to income ratios and how high rents are. And even though incomes have, like previous point said, even though incomes have risen, it's just not keeping pace with what some of the market rents are. And then another point is that more than half of renters have student loan debt. And for example, the average college graduate with a bachelor's degree now takes 21 years to completely pay off their student loans.
Holy
So, yeah, which I was not aware of that figure. And I found that kind of staggering. I mean, considering.
Yeah. Welcome to retirement. You finally paid off your student loan. That's insane. And I want to point out something you said earlier. You were talking about San Jose, and you'd mentioned, I believe the percentage was like 41%. Young adult roommates was what the study found. What I haven't heard, or I don't know if you know this, but I'd love for that study to tell us how many people are in that apartment as roommates. Because San Jose, they may be packing 17 people in there, as roommates because of how expensive California is. I don't know if did they make any differentiation between like two people sharing in a 2-bedroom apartment or like 5 people sharing a 3-bedroom apartment or any of that? Or is it just young adult roommates and people who aren't roommates?
Yeah, it just broke it down that way. It doesn't go very in depth in terms of like what the housing size is.
Gotcha.
But another thing that we've seen, aside from what's in this story that we were talking about, is the rise of what now they're calling co-living arrangements as well, which is more like almost like a dorm, like an adult dorm setup, which is apartment buildings where apartment buildings that have some level of service to them, and then the apartment units themselves may not have like the typical kind of a layout of like a single a 1-bedroom or a studio, but then the building might have some extra amenities. Also, some of these situations, the rooms are furnished rather than you having furniture, so it is more like you can kind of pop in and out of these sort of buildings in a way that's a little different than like a traditional apartment building. And I think that's also becoming popular as well among like this among this age.
I think we're talking about hippies. We're talking communal sort of bathrooms, or are we? I mean, this sounds like a hostel to me. I mean, do they have their own running water in these little apartments? Or I'm all for it, but at my age, I'm like, yeah, I like my space. So no, you can't use my bathroom. Go away. Wow, that's hard.
Yeah, in some ways, it's like a throwback almost to like tenements. I don't know, where things where like those sort of things are now shared again.
Hey, do we have time for one more story, or are we going to wrap it up today?
I could just touch on one more, just one more point that we had in this week, and then this is just again a sampling of all of the coverage that we've done on the site, but these are just some of the big things that we wanted to highlight for the week. But was just another important point for the market is just that the CMBS delinquency rate for all property types showed a decline in April. So for the two major agencies that kind of track this, TREP and Fitch, came up with their most recent numbers. They showed improvement for that, and that was pretty. There was maybe a little bit of different movement among some of the sub property types, but overall, the CMBS delinquency rate continues to fall. It's near at least cyclical, if not historical, low levels. So that's just a really good sign for the industry, especially if given again like where we are at in the overall cycle.
Yeah, I love ending on a positive note. That's great. So there's a bit of good news right here at the end. Yeah. No shared bathrooms in this story. That's fantastic. I noticed that, right? Any closing thoughts for today, David?
So I don't have any additional thoughts about the stories that we highlighted, but just wanted to thank people for tuning in. And this is a new project for us to try to bring a podcast with some of our highlights to the industry. So hope you are enjoying this and give us any feedback that you can.
Yeah, that's great. I love it. I'm having a good time with this, David, and I appreciate it. And thank you all for listening to the NREI Weekender with your host, David Bodamer. If you have not subscribed to this podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. Again, thanks for listening today. For everyone at the NREI Weekender, this is Aric Johnson inviting you back next week for all the news that matters to you. We'll see you soon.
Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of NREI Informa. The content has been made available for informational and educational purposes only.